Form-based cyber insurance quotes look cheap and fast until you try to use them. Then you find out that the deductible is sky high, the business interruption doesn't trigger when you think it does, ransomware response is capped, and the $1 million limit was never really built for your actual incident costs. Hey, if you're a business owner hunting for cyber insurance quotes online, let's talk about how to avoid the template trap and get a quote you can actually bind with confidence. Hi, I'm Gordon Coyle. For over 40 years, I've been helping business owners navigate the complex world of commercial insurance. I've seen every problem and costly mistake you can imagine. Here I share insider strategies and real-world solutions that protect your business and save you money. All right, let's dig in. The question is, what does a cyber quote form really give you? Speed? Not substance. You plug in the company size, industry, and revenue, and out pops a number based on a broad benchmark and default settings. That's fine for a ballpark, but cyber is a claims-made product with wording that really matters. How a claim is defined, whether you must use panel breach counsel, what the waiting period is before business interruption kicks in, and what sublimits apply to the things you actually spend money on. Incident response, forensics, notification, and restoration. Templates smooth those edges to sell at scale. Real coverage requires a short conversation so your quote reflects your systems, your data, and your downtime realities. Here's the bottom line. You don't need another generic number. You need an underwritten quote tied to your incident cost profile and your control maturity. That starts with a 20-minute intake where we map your real exposures. Do you have MFA across privileged accounts and remote access? Are backups segregated and tested? What endpoint protection runs fleet-wide? How much personally identifiable or regulated data do you store and where? If core systems were dark for 3 days, what revenue would evaporate and what obligations would it trigger? Those answers determine two things: what limits you actually need, and which carriers will price you efficiently. Once you know that, we design the program, not just the premium. Maybe business interruption needs a shorter waiting period because your cash flow cadence can't absorb a 24-hour clock. Maybe we split retention so you're not taking the same deductible on privacy liability that you would on network interruptions. Maybe we insist on separate, meaningful sublimits for incident response, forensics, and restoration instead of a tiny shared bucket that collapses mid-event. And yes, maybe we push for clear ransomware wording so the parts of the event you can legally fund are actually funded, even if paying a sanctioned wallet isn't on the table. Let me give you a real-world example. A SaaS company came to us with a $3,000 online quote for $1 million in limit. Looks fine on paper. In our intake, we learned that they had strong controls for MFA, EDR, quarterly phishing drills, and their customer base was subscription-driven. The real risk wasn't headline ransom, it was billing disruption. Their template quote had a 24-hour business interruption waiting period and a $100,000 shared bucket for IR and forensics. In a live event, that setup would have left them eating the first day of lost revenue and running out of response dollars fast. We restructured it with $2 million in limits, business interruption waiting period down to 8 hours, dedicated $500,000 for IR and forensics, restoration, panel breach counsel name so there's no fight on day one, and the price landed at $3,400. Slightly higher in premium, exponentially better performance when it counts. They bound the same day because finance could see exactly what problem the policy would solve. Here's what templates consistently miss. First are limits. The default $1 million limit looks tidy but collapses when you layer downtime on top of notification and legal costs. Second is wording. If you've never read how your policy defines system failure, you won't know when business income triggers. If you've never looked at a consent to settle or panel requirements, you won't know who you're allowed to call at 2 o'clock in the morning. Third are sublimits. A shared $100,000 for incidental response, forensics, and restorations is a rounding error once real vendors are engaged. Fourth are deductibles that look harmless on a quote sheet but are misaligned with your cash flow when invoices hit. What does that mean for you? Before you submit another quote form, flip the order. Talk first, quote second. We'll map your exposures, set sensible retentions, and pick markets that reward your controls. Then we'll present a carrier back number with clear tiers, what $1 million, $2 million, and $3 million actually buys you, and we'll spell out the fine print that matters. The business income waiting periods, the forensic buckets, the ransomware terms, panel vendors, and any co-insurance traps. You'll understand the trade-offs and you'll be able to bind without second guessing. If you want more context on how cyber pieces fit together, I've got a full cyber insurance hub on my website where we break it down in plain English. But if you're here because you need a quote that won't embarrass itself at claim time, let's do a 20-minute intake and get you something you can take to the CFO today. Here's the bottom line. Forms optimize for volume. Your business needs a policy that optimizes for reality. Spend a few more minutes upfront, avoid months of regret later, and buy coverage that'll actually work on the worst day of your life, not just look cheap on the best day. If you're ready, schedule a consultation and we'll get you the bindable quote with the right limits. If you're watching on YouTube, the contact information is in the description box below. If you're on my website, hit the button, which there's many of them on this page, and let's get it done right. Thanks.